Okay, what's up everyone? This is Scott here again with a brand new video to help you learn how to trade, invest, and master your finances so you can apply that knowledge in the real world and multiply your money. And so what I have here is my next installment of my live option trading series. Every Friday I post a video just like this that will show you all the trades and all the adjustments that I made over the past week. And so as you can see here, this morning has been a little bit busy, especially with JD. This one has given me a bit of a hard time, and I'll explain why in a minute. But overall, this was another very good week. This portfolio did generate a profit for, I believe, the 6th week in a row, which is very nice. That being said, in terms of new trades, this week was very, very quiet. The only new position I put on was an EWZ, and I'll show you a clip of me actually putting on that trade here in a second. But it does seem across the market right now, we are in a slump in terms of implied volatility. Let's go to the VIX futures really quick. Let me move these charts down a bit, and I'll zoom in. And so we did see a slight expansion of implied volatility for the S&P 500 and most stocks within it this week, but still a very, very small amount. And today, the VIX is coming back down. So what that translates to is option prices across the board are still pretty cheap right now. And it's been very hard for someone like myself, who is an option seller, to find any stocks with high implied volatility, expensive options, to step in and sell those contracts. So like I said, the only product I could find this week that was actually worth selling options on was EWZ. Now before we fully dive in and I show you this trade and also what's going on up here with JD and Peloton, as always, if you are brand new to the channel, I just want to let you know that you can also find me on Skillshare as well, where you can take my very in-depth classes on options trading and stock market investing. And I provided some links to some of the introductory courses of mine in the description of this video below. So be sure to check them out. And when you sign up for Skillshare using any of those links, you'll get a full 1-month free trial. Okay, so with that being said, I'm going to stop here and play a clip that I recorded from this past week that will show me putting on this trade in EWZ in real time. And of course, my thought process and my rationale behind the trade and all that good stuff. So let's get started. All right, today is Wednesday, September 8th, and what I'm looking at here is EWZ. This is a Brazilian ETF that tracks the Brazilian equity markets. I've traded this one many times before because oftentimes this ETF does have pretty nice spikes in implied volatility, which you can see down here. So today especially, we're seeing a very nice spike in IV all the way up to around 54%. And so this translates to a very nice IV rank of 85%, IV percentile of 97%. So clearly based on these indicators and also just by looking at this chart, the IV right now is definitely on the very, very high end for this ETF over the past 1 year. And it definitely seems something is happening with this ETF because if you come to the price action chart, and I'll zoom in here a bit, this ETF is down pretty hard today, almost 5%, which is a very large move for an ETF. And I do think this is a very interesting level because I do see a lot of support right around this price. So let's actually zoom back out a little bit here. And we'll go to my drawing tools and go to this one right there. So I'm going to draw a support level right around here, and we'll draw it over. And there we go. And then let's switch back my tools so I can zoom back in, and we'll go right here. And finally also move these charts down a little bit so it's easier to see. There we go. So as you can see in the past, at this point here specifically, this line was definitely acting as support. Right, very clearly in this zone, EWZ bounced off this level once it got down to it, and ultimately once it did finally break through the support, thereby causing it to flip to resistance, you can see there was 1, 2, 3 failed attempts to break back above this initially support level. And ultimately on the 4th attempt, it did finally break back above it, and once again flip this back from resistance into support, like it was doing back over here. And then fast forwarding a few months, all the way over here, back in, looks like, late August, it acted as support once again. EWZ bounced right off it, and now look where we are once more. I'll zoom in a little bit more, and there we go. Take a look at this. So does this mean that come tomorrow or come the next few minutes, does EWZ have to bounce right off the support level? No, this could be the next time where this support does fail and EWZ breaks down below it. But as you just saw, this price level is significant in some way. At least that's how I perceive it. So anyways, I do like EWZ at this point, at this price, so I'm going to go ahead and sell a few naked put options on this ETF. So I'll come over to the trade tab here, and I'm in the October expiration cycle with 37 days left to go. And my choices are either the 34 strike put option or the 33 strike put option. For me, I'm going to go with the 33 to give myself a bit more cushion in case I'm wrong. right? Because with EWZ currently at $34.25, that's very, very close to the 34 strike put options. So I'm willing to give up some credit in order to give myself more cushion. And that's why I'm going to go with the 33 strike put options. So we'll click on the bid price here. That brings up the sell order down below. I'm going to sell 3 of these contracts. And the bid and ask spread, let's see, the bid is 109, the ask is 112. Very close. I like that. Obviously, there's great volume, great open interest on this ETF, so these options are very liquid. So let's see if I can get filled right around 111. We'll go to confirm and send. Buying power effect is $1,700. That's fine. And we'll go to send. And there we go. Just got filled at 111 exactly. Awesome. And then last step, you know the drill. I'm going to go ahead and also set up a buying order now to buy these contracts back for a lower price if I am correct on this trade, right? Because if EWZ does move higher, then these contracts are going to become a lot cheaper. And also if implied volatility contracts, that's going to help me as well. And then of course also there's time decay to factor in too. So all 3 of those things can work in my favor to reduce the value of these contracts by a lot. So down here, going to buy these contracts back for half price. Half of 111 is 55. And of course, we're going to buy back all 3 contracts, make it a GTC order, and then we're all done here. And then also, if I am wrong on this trade, if EWZ just keeps going lower and lower and lower, breaks through the support level and keeps on going, then at that point, once EWZ breaches my put strikes, I will start shorting shares of this ETF. Now also, before I wrap up here, let's come to the monitor tab real quick, and I'll scroll down. So I did also have to hedge 2 of my positions today. Or excuse me, I hedged 1 position in WDC and then took off a hedge I had on in JD. So let's look at WDC first. We'll come to the charts, WDC. So this was a trade I showed earlier in one of my previous live option trading videos. We'll zoom in here a bit. And so for this trade, I sold a bullish skewed strangle, and I noted this line here in red. This was the support level I picked out initially. And as I feared, once I saw the stock breaking down below the support level, my fear was that the stock is just going to keep on going. And that's exactly what's been happening. So in particular here, my short put strike is at 60, a full $2 above the current stock price. And so just like I explained with my EWZ puts I just put on, with this one here, once WDC broke through my put strikes, I shorted 100 shares of stock. And that's what you saw over here on the monitor tab with this order. Sold 100 shares of WDC, and the price I got filled at was at $59.47. So I did miss my mark by a little bit. Ideally, I wanted to short those shares at a bit of a higher price, but $59.47 is close enough. And as a result of doing that, you can see down here, this is my position in WDC. I'm actually still up on this position overall, only by about $20, but still, I'm up on this position, even though my put strike is breached by a significant amount. And then for JD, this is a naked call option position I sold a few days ago, and we'll go to the charts real quick here, go to JD. So in an opposite fashion, we'll zoom in here a bit, instead of a support level, I drew in this resistance level, right? Because you can see many times in the past, JD got up to that point, right around $80 per share, and then it backed off. And I assumed that's what was going to happen here again. I'll zoom in a bit more. So once again, JD got all the way up to this point, $80 per share, and then it started to turn around, which you can see right here, but boom. Yesterday, the stock totally gapped above it, went a lot higher, and so as a result, I had to buy 100 shares of stock because it breached my short call strike. Now today, as you can see, the stock is coming back down, and it did fall back below my call strike, so I did have to get rid of those shares, and did so for a pretty small loss. So we'll see what's going to happen with this position over the next few days. If JD does actually turn around and go lower, I can make money that way, or if it does resume back higher, once again, I'll buy the shares, and I can still make money that way. Okay, welcome back. I hope you enjoyed that clip. And so now let's take a look at my EWZ position today, which is Friday, September 10th. And definitely so far so good here. Currently, I'm up on this position by about $93. So we'll come to the charts and we'll see why. Go to EWZ. And here we go. Let's zoom in. So it definitely seems like my support level that I drew in still remains significant and still remains as a support level. Here was the day I put on that trade, right when EWZ was about to cut through it. And then the following day, boom, it shot right back up. And also by a very large amount. Now today, EWZ is coming down a little bit. And actually, in fact, this ETF is down by just 1 cent at the moment, so unchanged. But like I was saying, so far so good on this trade. I would like to see a bit more follow through, a bit more upside movement, because that combined with a continual contraction in implied volatility, take a look at this. Look how much the implied volatility has come down just in the past 2 days. So again, if EWZ can move a bit higher and also implied volatility contract a bit further, then I should be able to take this position off for a very nice profit. And so let's come back to the monitor tab now and take a look at my JD position, which as I showed you is giving me a bit of a hard time at the moment. Now originally this position was just a simple naked call option. Specifically, I sold the 82.5 strike call, but now you can see this morning I am also short the 72.5 strike put option. Now why is that? Well, if you've been following my channel for a little bit of time, you might know that my current management style for losing positions is to either buy or short shares of stock as a hedge. So for example, if we come to the trade tab real quick and we'll go to the JD option chain, here we go. As you can see, I am short the 82.5 strike call and the 72.5 strike put in the October expiration cycle. So specifically, my current approach is if the stock does actually breach one of my short strikes, in this case, JD has breached my call multiple times. Well, in this case, once JD breaches my call strike by a small amount, I'm going to step in and buy 100 shares of the stock and in effect convert this initially short naked call option into a covered call option. And in that way, the stock can continue higher for as much as it likes. JD can double, triple, quadruple in price and it will not matter. Because again, I will have bought the shares right at my strike price. Now this approach in my experience has been working extremely well, but sometimes there can be issues if the stock continues to just bounce through my strike over and over again. And that's exactly what's been happening here this morning. So you can see pretty much right when the market opened, I bought these shares, 100 shares of JD at a price of 82.81, just above my short call strike, and then I sold them at a price of 82.48 because the stock reversed down lower. And then not long after that, JD reversed again, went back higher, so I had to buy the shares once more at a price of 82.80. And then from here, the pattern just continues. JD dropped again, I sold the shares at 82.49, and so on and so forth. So in total so far, I've had to buy and sell the shares 3 times, 3 round trips essentially. Now each time I do this, I am going to lose about $30, a very small, manageable amount of money. But again, if this happens many times, those $30 are going to start to add up. And eventually, if those small losses do start to add up too much, I'm going to have to step in and make an adjustment to take in extra credit on this position. And that's why, coming back to the trade tab here, that's why I sold the 72.5 strike put option. Because when I sold this one earlier this morning, I took in an extra $114 of credit, which basically more than cancels out all the losses I took from having to deal with the stock this morning as well. Right, so far today, I've lost about 90 something bucks on the stock. But again, if I sold this put for 114, again, that means I've more than canceled out those losses. The main downside here though is if JD really actually reverses hard. Right, for example, if you go to the charts real quick, you can see, I'll zoom in a bit, JD is sky high at the moment. And that combined with the fact that I thought this resistance level here in red was going to hold, and obviously it does not. But my initial assumption here was that JD was going to actually reverse and come down by a significant amount, maybe down to $72 per share. So in that case, if this does eventually happen, now I have to worry about JD blowing through my put strike. So what that means, if that happens, if JD falls below 72.50, I will then have to step in and start shorting shares of the stock to therefore turn this naked put option into a covered put option. And then in a similar fashion to my call option, where I can buy the shares and then it does not matter how much higher JD goes after that. Same thing here, except it does not matter how much lower JD goes. Once I short 100 shares at 72.50 or right around that price, JD can go to 0 for all I care. And I will still have the opportunity to walk away from this trade by the expiration date with a nice profit. And that's just because as an option seller, you will always get to keep the credit you sold your options for. Assuming, of course, you do hold this position all the way to the expiration date. So even though this stock is kind of annoying me at the moment, my overall credit on this position is still high enough to walk away by the expiration date with a full profit. The same profit I was targeting initially when I put on this trade at the beginning. So that's JD. Let's come back to the monitor tab now. And I'll move forward with some updates on my other positions. My Alibaba short strangle is looking very nice. As you can see here, I'm up on this one by about $230, getting very close to my profit target. So we'll come to the charts real quick and take a look at what's happening here. BABA. And of course, let's zoom in. So just like last week, this stock has done nothing except just move sideways. And my strikes for this strangle are at 150, way down here, and at 190, way up top. So with Alibaba right now being just under 170, it is quite literally right in between my strikes. Now also implied volatility has not moved by much. This too has pretty much just gone sideways. So therefore, it would seem that a good proportion of my profits on this position so far are simply due to time decay, right? Which is simply that natural decaying of option prices, of option value as time marches forward. So nothing to do here except just to be patient and wait for my profit target to get reached. We'll come back to the monitor tab now. Next up, we have my NUE short strangle. And as you can see here, I am short the 110 strike put option, 140 strike call. And overall on this one, I'm only up by about 35 bucks. I still have a long ways to go to reach my profit target here. So we'll come to the charts real quick and go to NUE. In case you don't know, this is Nucor Corporation. They're involved in the production of steel and other steel products. And I would say the main reason why this stock is giving me a bit of a hard time, or why my strangle is not very profitable currently, is because one, implied volatility has actually expanded since I put on this position. So this here is definitely going to prevent to some degree the prices of the options I sold from decreasing. And as an option seller, that's what I want, right? I want to sell options when they have high prices and buy them back when they have much lower prices. And that's obviously not happening right now. And then also for a time, this stock was getting much, much closer to my put strike. It was going down almost every single day in a row. And it did almost breach my short put, but it looks like today and also yesterday, this stock is finally starting to turn around. We'll see if it lasts though. But also this big down move was preventing me from making money on this trade as well. So once again, I just have to be patient here and wait for implied volatility to contract and hopefully also for the stock to continue moving higher. Let's come back now. Now my Peloton short strangle, I did take off for a full profit this morning, finally. This was originally an earnings play where I sold a short strangle. Here's the buying order from taking my profits off, or just taking my profits this morning. Initially, I was short the 140 strike call, 95 strike put, and the profits for this one came in huge just over the past 2 days. So we'll go to PTON and we'll zoom in a bit here. So this was the earnings announcement date right on August 26th. And Peloton definitely did disappoint in their earnings figures, so that's why the stock just tanked for many, many days thereafter. We still saw a nice contraction in implied volatility, which you can see here. That definitely helped to counteract the big down move that got very close to my put strike. Right, again, keep in mind my short put is right here at 95, so got very, very close. But like I was saying today and also yesterday, huge move to the upside. I honestly don't know why. I'm sure there is some news announcement, but frankly, I don't really care. So this massive push away from my put strike is what allowed me to take this position off this morning for a full profit. And this also here is another example of had you bought options before an earnings announcement, you would have lost a lot of money. And so if you have not seen my most recent video I uploaded prior to this one here, it's called Reviewing a Scammer's Most Quote-Unquote Profitable Option Trading Strategy. I'll post a card to it above linking to it. In that video, I exposed 2 scammers for their terrible approach to options trading that they claim will allow you to make money effortlessly and easily in the market on a daily basis. So if interested, definitely check that video out. And like I said, this trade here is just another example that serves to prove my point that if you want to be successful trading options, you must be selling them, not buying them. So let's come back again, back to the monitor tab. And 2 more to go. I also have a short strangle on WDC. This is Western Digital. We'll come to the charts real quick. Go to WDC. As I showed you in that clip from earlier this week, let's zoom in here a bit. This stock is still below my short put strike of 60. Let me push this down a bit here. So again, my short put strike is at 60. The stock is now at 58.24. So nothing really has changed here. I am still short 100 shares of the stock, which means at this point, WDC could just keep falling lower and I could still make money that way. Or if this stock does reverse and breaks back above my short put strike, I will close out that short stock position. I'll buy the shares back. And then at that point, this stock could skyrocket for all I care, and I can still make money that way too. Let's come back. And finally, we have my Wynn Resorts position. And this one here is a short strangle that is very similar now to my JD position. Right, basically, I've had to use the stock many times as a hedge on either my call option or my put option for this position. This stock definitely has whipsawed me quite a bit. So as you can see, I am short the 92.5 strike put and the 96 strike call. And also I am long 100 shares of the stock. because right now Win is well above my call strike. And that is totally fine, right? Let's come to the charts real quick. Go to WYNN. So Win is coming down pretty hard today. It's now at 101.29, still well above my call strike. And there is only 1 week left to go on this position, 1 week before the expiration date. So ideally, if Win can just hover around this price between 101 and maybe 105, as it has been doing for many weeks now, then come next Friday on the expiration date, I will walk away with a very nice profit on this position. And again, that's because my overall credit on this position is still much higher than the money I have lost from having to deal with the stock as a hedge. And that's why, in particular, I've had to move my call strike quite a bit. Let's come to the September expiration cycle. There we go. That's why I've had to move my call strike a few times to take in more and more credit. Because initially, I was short the 115 strike call way up here, but I did have to roll this thing down 2 times all the way to the 96 strike call to take in that extra credit. So again, I just have to hang on tight here for 7 more days. That's it. And I believe that should do it for this video. I've already gone ahead and looked through my watch list to try and find new positions. I could not find anything. Implied volatility is just way too low at the moment. And also my portfolio here is still pretty adequately filled with 6 positions. So I'm definitely not eager or too desperate to try and find new positions at the moment. So thanks a lot for watching this video, and please let me know your thoughts or if you've got questions in the comment section below. And don't forget, if you want to take some very in-depth classes on options trading and stock market investing, then check out my Skillshare courses, links in the description of this video. And finally, if you enjoyed this video, then please give it a thumbs up, drop a comment, and subscribe to my YouTube channel. I drop new videos every single week, and you don't want to miss out. So thanks again for watching, and I'll see you next time.